Hello everyone, I hope you all are doing great. In today's session, I'll be discussing a very small standard on IAS 23, which is also known as borrowing cost. In today's session, I will not be discussing any calculation. I have kept it for a separate video. In today's session, I will just be discussing the theory around this standard. So let's begin. IAS 23 addresses the treatment of the borrowing cost. It says as a summary that borrowing cost directly attributable to the acquisition, construction or production of a qualifying asset. This is a key statement that the acquisition, construction or production of a qualifying asset, any borrowing cost incurred in this section will be capitalized as a part of the cost of the asset. Remember when we were talking about IAS 16 initial recognition, when we were worrying about what kind of costs are going to be capitalized as part of the initial purchase price, there we had discussed that any borrowing cost which will be attributable to the acquisition of that particular asset will also be capitalized. Capitalized means that it will be added to the part of the cost of the asset. But the key term here you must remember that it says the acquisition, construction or production of a qualifying asset. We'll be discussing each of these terminologies in a while, but as a summary you must remember this statement. These costs are going to be including interest and other costs incurred during the period of borrowing. Borrowing costs that are not directly attributable to the qualifying asset should be expensed in the profit or loss as they occur. Moving on, let's talk about what are borrowing costs. Borrowing costs are going to be those costs that are incurred by the entity in relation with the borrowing of the funds. So you go to the bank or any loan provider, when they provide you the loan, the cost that you have to incur as relation with borrowing of those funds, those are known as the borrowing cost. They are going to be including the interest expense that you have to pay, finance charges in respect with the finance leases, exchange differences arising from the foreign currency borrowings. All right, those are also going to be capitalized to the acquisition, construction or production of a qualifying asset. Just keep in mind that these are three kinds of costs that are going to be associated with relation of the borrowing of funds. Just keep that in mind. We are not going to be overcomplicating anything. Just keep these types of cost in your mind. The key point is that borrowing costs directly attributable to the acquisition, construction or production of qualifying asset are capitalized and other borrowing costs are recognized as an expense in the profit or loss. So you have to be able to recognize which of the costs were associated with the acquisition, construction and production and which of these were not associated, and you have to then decide the treatment accordingly. Moving on, what is a qualifying asset? Notice how when we were trying to read the statement, we were continuously saying a qualifying asset. All right, we were saying that if it has to be associated with acquisition, construction and production of a qualifying asset, then borrowing costs are going to be capitalized. But what is a qualifying asset? In simpler terms, you can think of an asset, qualifying asset, as being an asset that qualifies for capitalization. But how do you decide if an asset is going to be qualified for this particular treatment of the borrowing cost? A qualifying asset is an asset that takes a substantial amount of time to get ready for use or for sale. Substantial amount of time means a time that it takes greater than 1 year. Substantial amount of time means greater than 1 year, and it takes a long time to get ready. That kind of asset, if the borrowing cost is incurred for that particular asset, then you can capitalize it. All right, that it takes a significant amount of time to get ready. These assets are generally going to be including property, plant and equipment, because they just don't get ready in few months. Investment properties, intangible assets. It does not include assets measured at fair value, and also we have something related to inventories. Inventories are excluded from capitalizing the borrowing cost in most cases, okay, except when they are not produced in large quantities or on repetitive basis. We all know business can have different kinds of operations. One of those operations, if for example they are let's say manufacturing their inventory and then they are selling it. So usually when it is their business model, then you would see that the entity is going to be there's going to be mass production of the inventory that is manufactured for the purposes of sale. In that situation, any borrowing cost that will be incurred in relation to the manufacturing of such inventory will not be capitalized. Okay, inventories produced in large quantities on repetitive basis do not qualify for the capitalizing borrowing cost. The borrowing costs are going to be recognized as an expense. Inventories, however, that are custom made or take significant time to produce may qualify for capitalizing borrowing cost if they are not produced in large quantities on a repetitive basis. So in such situations, inventories that might have been produced on custom based, or they have been produced, they take significant time, but they have been produced like once or twice. In that situation, you can capitalize the borrowing cost. But you cannot capitalize borrowing cost on those inventories that are produced on repetitive basis or on mass scale. I hope this is clear. You just need to keep these in mind, because in the exam you will have to identify whether the asset was taking substantial amount of time to get ready. If not, then you cannot capitalize the borrowing cost. All right, so please keep these things in mind. When borrowing costs should start being capitalized? So we have now identified that we have a qualifying asset, an asset that is going to take substantial amount of time to get ready. Now we should start worrying, when should the capitalization occur? So there is criteria that IAS 23 states. Capitalization will begin when the expenditure begins for the asset. So when you actively start constructing the asset, you bring the labor, you bring the material, you start operating the machinery, so you are spending on manufacturing the asset, the expenditure has begun. Then borrowing costs begin to be incurred on the loan. So it means that you've already taken the loan and the interest has started to accrue on that loan. So borrowing costs have begun. Activities related to building or constructing the asset commence. Example, planning or obtaining permits. So in such situation, you can just say as a summary that the things have started actively happening. Okay, expenditure has begun, borrowing costs have started to occur, and activities related to building or constructing the asset commence. So you have started the construction of the asset. Simply acquiring an asset for development is not sufficient to start capitalizing borrowing cost. So for example, you have the asset that is, you have all the things that are ready, but you have not started to construct the asset. Okay, you have the material, you have the labor booked and everything, but you have not started developing the asset. In that case, you cannot capitalize the borrowing cost. Okay, now what are the two scenarios for borrowing cost? So the important thing is that how are we going to calculate the borrowing cost? Number one, what an entity can do. When we are, for example, going to take the funds, they can use their current funds. So use of current borrowings. So when borrowing costs are incurred using funds already borrowed from other sources, journal borrowings, the weighted average cost of borrowing is calculated and applied to the cost of the asset. So what does this mean? Now an entity can have pool of funds that include funds from various sources that have been borrowed. So they are all kind of mixed up. Okay, so what happens is that entity might decide to take some funds out of that pool and then use them on the construction of the asset. So you might wonder, how will I calculate the borrowing cost on those funds? Because they have been acquired from the pool where funds from various sources were present. In that situation, we will be calculating weighted average cost of borrowing. So it's like an average cost of borrowing, average interest, which we will be calculating on borrowings. In this situation, the funds that are used for the purposes of construction, those types of funds are known as journal borrowings. Okay, so please keep that in mind. An entity can have journal borrowings, or an entity can have specific loan for the asset. So you go to the bank or any other loan provider and you would be taking specific funds for the construction of the asset. In that situation, you would already know how much interest you have to pay, right? So that will be your borrowing cost. But an entity can, what they can also do is, if they have taken a specific loan for the asset, they can also take some of that loan and they can also invest it somewhere to earn interest income. Okay, it's up to them. If they have, for example, taken $1,000 of loan that they say specifically they want to take for the construction of the asset, they can spend $500 on the uh, asset construction, and they can take the 500 and they can put it in the bank to earn interest income. This is what entities can do. In such kind of situation, what you will do is you will take the net interest cost, and that is what you will be capitalizing. All right, so if you have spent this much on construction of the asset and you have invested the 500, what you will do is you will calculate the interest that you have to pay on those borrowings and the interest that you are earning. Okay, and then you will take the net, and then you will be capitalizing the net cost. Essentially the total interest cost will be paid on 1,000, right, because you've borrowed 1,000, but you have also spent 500 in the investment purposes, right? So you will take the net amount, and that is the amount which you will be capitalizing. Is that clear? I hope that is clear. But once you will do the calculations, it will make everything clear for you, so don't worry. But just keep in mind that you will have journal borrowings and you have specific loan which you take out. Okay, now when should borrowing cost stop being capitalizing? Now you must remember, it is extremely crucial under IAS 23 that you identify when capitalizing should stop occurring, because IAS 23 gives you a benefit. Rather than expensing the borrowing cost and reducing your profits, you can capitalize and increase the value of your assets. Isn't it a benefit for the company? So IAS 23 has strict guidelines, strict principles on when the borrowing cost should stop being capitalizing. Borrowing cost should stop being capitalizing when virtually all activities for constructing the asset are completed. As soon as completed, stop capitalizing. All right, meaning only final touches are left. These include when the asset is available for use, so it is now already available for use sitting in your warehouse or any storage facility. If the asset is completed in parts, capitalizing stops when each part is completed. Okay, but it will depend. We will see. If any question arises, then we will see how we are going to account for it. But essentially what it says is, as soon as all the work on the asset is completed, your capitalizing should stop. If the asset cannot be sold until all parts are completed, capitalization starts when the last part is finished. So as soon as everything completes, the asset is ready, happy and sitting, you should stop capitalizing. If there is a temporary halt in construction, borrowing cost should stop capitalizing unless the delay is part of the necessary construction process. It's extremely crucial. Now IAS 23 says that borrowing cost should start capitalizing when all the activities, expenses are necessary to construct the asset begin, right? This is something that we have just seen. So your question could be that what happens if there is a temporary stop in the production? If there is a temporary stop, the borrowing cost should also stop capitalizing. It is that strict. The borrowing cost should stop capitalizing. But if the delay is a part of necessary construction process, example holidays, weather delays, or unforeseen circumstance, in that situation you can continue to capitalize the borrowing cost. All right, if it is necessary. If it is not necessary, something has happened, if there's a temporary stop, you must stop capitalizing as well. Okay, so what happens if activities stop temporarily? If a construction activities stop for an extended period, capitalization of borrowing cost should cease. Stop capitalizing, and any borrowing cost incurred will be recognized in the profit or loss. So it is typically it can happen, it is common. For example, across this timeline you have, let's say, 6th month here, this is the 1st month, and this is the 12th month of the construction. It is very much possible that a temporary delay occurred in the 3rd month. Okay, so from the 1st month to 3rd month you will capitalize those borrowing costs. From the 3rd month to 6th month, it is very much possible that you expense these borrowing costs, and once the delay finishes, from the 6th month till the 12th month, you can again capitalize. So it is very much possible, but you must remember, you have to follow the IAS 23 criteria strictly. Don't just keep on capitalizing. You must remember, you must ensure that activities necessary to construct the asset are being commenced and the expenditure, i.e. the borrowing costs, are being incurred. All right. However, if the pause in activities is a necessary part of the construction, example public holidays or planned breaks, borrowing costs can still be capitalized. All right. Lastly, let's talk about the journal entries. Borrowing costs that are directly attributable to the construction, acquisition, oops, acquisition, construction, or production of a qualifying asset form part of its cost. Okay, this is something we have just seen now. These capitalized costs increase the carrying amount of the asset. All other borrowing costs are expense as incurred. All right. Okay, so in terms of journal entries, if you have to capitalize the borrowing cost, requiring that all the conditions are met, in that case you will debit the property, plant and equipment. You will increase the value of that particular asset even though it is still under construction. For example, you will capitalize it, so you will debit the property, plant and equipment, and you will credit the interest accrual, because it might be possible that you haven't paid the interest yet. You might pay it at the year end, it's completely fine, but on monthly basis, as you will be incurring those interest costs, you have to create an interest accrual, a kind of a liability. All right, so you will be crediting the interest accrual. Then in cases where you have to expense the borrowing cost, if any of the conditions under IAS 23 are not met and you have to expense the borrowing cost, you will simply debit the profit or loss and recognize the expense, and then you will credit the interest accrual as usual, recognizing that you have to pay the interest. So this is how you're going to be treating the borrowing cost under IAS 23. In the next video, I'm going to go through several questions under this standard, so make sure you do not miss that out, because any confusion if you have right now will all be cleared in the next one. I will be showing you journal entries along with detailed calculations of how things are treated under IAS 23. So as soon as you finish this, come there soon. All right, I'll see you there. Bye.